Lesson 2. Classic Patterns of Technical Analysis. The Symmetrical Triangle. Let's take the pound versus dollar currency pair on the 4 hours chart. The symmetrical triangle is formed given a descending resistance and an ascending support. The resistance line is drawn through the peaks, the support line through the troughs. We draw the levels and get this symmetrical triangle. In 50 cases out of 100, this pattern is broken down. In other 50, a breakout occurs. It's impossible to say beforehand which way the price would go. After a real break, we can consider entering a position, but never before. In this case, the resistance level was broken. The price was closed at the level 1.9582. That very moment, we can open a buy position. So, we open it to continue the movement. Please note this small retreat to the broken level. And the movement is resumed only after that. Let's talk about setting your goals based on the symmetrical triangle. They are defined by the horizontal levels drawn through the peaks above the broken line. Please note, the first peak, the first goal, was hit the moment a break was formed. The next profit-taking level is at 1.9642, and it is drawn through the second peak. And the third goal, the maximum in this case, is at the level of 1.9722. When we open a buy position, everyone should decide for themselves which goal to set and what profit to wait for. The higher the goal, if we talk about the maximum, the longer we have to wait for it. And it is not always reached, which is another significant moment. The guarantee of reaching the profit-fixing zone is 95% on the first level, 80 to 85 on the second, and only 70 on the third. So, the guarantee is much lower, and you would have to wait for much longer too. Therefore, everyone should set their own goal level. There are possibilities for those who want to get little but quickly, and for those who want a lot and are prepared to wait. Let's decide where we put the stop loss. As we know, it is placed behind the next support level. We've opened a buy position at 1.9581. The first support level is the former resistance line. So, we place our stop loss behind it, not forgetting about the inaccuracy and the price noise. Shadows could appear behind the line, so let's give it ample room. Considering it's the pound versus dollar currency pair on the 4 hours chart, we'll put the stop loss of 40 to 50 points behind that level. That makes it 1.9498. The forecast touch is at 1.9548, 50 points below the support line. Now we are well protected against a false break if those shadows try to fix our stop loss. So, what do we get as a result? We have opened the position at 1.9581. The market came down slightly to test the support line, but there was no break. The line withstood the test. Those market players who did not open earlier are buying from it now. That started a movement, reaching the second profit-fixing level. The third level was not reached at all. Then a descending movement was set, which means that the pattern did not work off in full. Those hoping for the maximum profit did not get it. What can you do here to secure yourself against a similar negative scenario? If you open a position and the price reaches, let's say, the second profit-fixing level, you don't need to close the position, you can wait for the third level. But move your stop loss to a loss-free position. Then, in the worst case, we won't lose anything. In the best case, we'll reach the maximum goal. The immediate goal is not to lose anything on any deal. The ultimate goal is to take profit on reaching the initially set goals. Notes: open positions within patterns only after a real break. The guarantee of reaching the first goal is 95%, the second 80 to 85, and the third one 70. Price noise: groundless, unpredictable fluctuations up to 15 points. The smaller goals we set, the easier they are to reach. Lesson 2. Classic patterns of technical analysis. The flag. In order for a flag pattern to appear on a chart, there have to be two price channels. Let's look at the example of the Australian and American dollar currency pair on the one-day chart. We find several price channels. Everything starts here with the first channel. We draw a resistance on the peaks and a support on the bottoms. The levels are ready. Then the price starts moving up the north quite fast. But at some point, the market slows down, forming something like an inside price channel. It's a place for a short-term delay. The resistance is drawn on the peaks. The support is at the bottom. One more price channel is formed. When the top line is broken, it's a signal to buy because of the continuation pattern. Here's the first price channel where it all started. It is the second continuation pattern. The flag is a pattern of continuation of a purposive movement. That is why, with a break on the top price channel, you should be entering to continuation, that is, to be ready to buy. Let's zoom in to take a closer look. There is a break. When the price is 0.8321, we start buying. When it's 0.8320, we start the deal. What should our goals be? They are defined according to the distance between the price channels. Let's see how much that is. It's approximately 300 to 320 points. That means that the maximal goal in this deal will be 320 points. We protract it on the chart. The maximal goal will be on the level of 0.8600. Don't forget to leave some tips for the market. That's why we put our target level at 230 points. That means the price will be 0.8550. When the price is reached, we'll take our profit and close the deal. Now, let's discuss where to hide the stop loss. The broken resistance level became support here. Even if there is a downtrend, it will be cut at the support level. That means we hide the stop loss at 0.8250 behind it. Then we wait. We see the uptrend, then the correction here, and then new wave. Eventually, it reaches our fixed level as well as the maximum. Then the growth continues, but it can't be predicted by the pattern. The flag depleted at the level of 0.8600. Then there is only 50 to 50 chance. Lesson 2. Classic patterns of technical analysis. Double bottom. The pound versus dollar currency pair, 4 hours chart. The double bottom is determined in the following way. We take two formed bottoms and draw a line through them. That gives us the support line. We draw a parallel projection of the lower support through the middle peak between two bottoms. In this case, the projection would be the forecast resistance line. The price is at this level and it approaches the forecast resistance. If a rebound is formed here, it will give us a classic price channel where all the work is rebound-based. It drops to the support line, we buy. It goes up to the resistance, we sell. If there is no rebound and a real break takes place, if the candlesticks close above the forecast resistance line, it gives us a good signal to open a buy position to continue the movement. With a real break, we get the double bottom pattern. We can see a real break here at the level 1.9828. So, we enter a buy position to continue the movement. How do we set the goals? It is done proceeding from the height between these two lines that makes it 108 to 110 points give or take. We won't set the maximum goals, so we'll go a bit lower. Let's make our take profit level 90 points. It's a good and quite reachable goal. Now let's calculate the stop loss. It should be hidden behind the broken line, which becomes resistance. Considering we have the strong pound versus dollar currency pair on the 4 hours chart. And since we don't want any shadows here, we place our stop loss 50 points from the touch at the 1.9772, which could take place at 1.9822. 50 points. Now we have to wait. We can see a further movement. The set goals are reached in the end. How long did the position work? 6 or 7 candlesticks. It's the 4 hours chart. So the goal was reached within 24 or 36 hours, and the position was closed in profits. The double bottom pattern has worked off 100%. Notes: double bottom, double peak, reversal patterns. Lesson 2. Classic patterns of technical analysis. The head and shoulders. Let's consider the reversal pattern of head and shoulders on the currency pair of British pound versus American dollar. How does this pattern get defined on charts? Let's examine it. Here is a left shoulder, a head, and a right shoulder. We form a resistance through the two peaks. It's called the neckline in this case. By connecting these 2 points, we form the neckline. Then we have to wait for this level to be broken. When the break happens and the candlestick is closed above the neckline, we enter the buy position safely. The price here is 1.8840. The goal is defined as follows. We measure the distance from the neckline to the crown of the head. It's about 340 points. The maximal goal of the deal by the pattern is 340 points. We'll aim at a little less. As a matter of interest, let's calculate 2 variants, also with the maximal goal. The goal of 290 points will be on the level of 1.9130. The maximal goal will be on the level of 1.9170. You shouldn't be greedy, so leave a margin for the deal to be definitely profitable. 290 points is a very good result, so don't try to reach much further. It's necessary to calculate and draw the line of stop loss. The resistance was broken and became the support. If the price returns to it, there should be a rebound. However, the rebound could be lower as much as 50 points. This is the 4 hours chart, and the stop loss is quite large. Let's put it on the level of 1.8760. The touch could be on 1.8810. The stop loss is 50 points. It's decent for the currency pair and the occasion. Then we wait. We see the prices go north with some corrections, but reaching the level of 290 points. The deal is closed. Note that most participants fixed their profits here too, which caused a retreat to the level of 1.8955. However, the participants with the maximal goal reached their levels. The only drawback was that they had to wait for it much longer. There is no need to sit for weeks or months on one deal. It is enough to earn 290 points in a short period of time. The less time we spend in the market, the less chance something goes wrong. It's better to set smaller goals and get stronger guarantees that the deal would be profitable. In this case, the pattern of head and shoulders has done its job. Notes: head and shoulders is a reversal pattern. It's better to calculate the goals within a pattern from the level breaking price. Head and shoulders pattern can be seen and calculated on the periods not less than H4. Lesson 2. Classic patterns of technical analysis. The ascending wedge pattern is formed given the ascending support and resistance levels. Here, through the troughs, we draw the support line, which is going up. The resistance goes through the 4 peaks. Both lines are ascending and they both meet, forming the ascending wedge pattern. The wedge is a reversal pattern and is broken mostly in the southern direction, which means breaking of the support level.
Like in any other pattern, the signal to open comes with a real break when a candlestick is closed below the line. When we enter the market, in this case, to sell, we need to set the goals. It is done according to the bottoms that have shaped the broken level. The first goal is the closest. The second one is more distant one. You need to wait longer to reach it, but it would lead to a higher profit. And the third goal is the maximum. Please note that after a real break, the first profit-taking level is reached. Then the price returns to the broken line, which now acts as a resistance. Like in the classical technical analysis price channel, when a support line is broken, it changes its status and becomes a resistance. And only when the market returns to the broken level, the players start selling enough to move towards the second goal, and later onto the third one. All the goals have been reached. Even those who were after maximum goals could fix profits in the end. But let's remember how long those positions work for. If we set moderate goals, like the first or the second, we have a higher chance of reaching them, and the position would close much quicker too. We won't have to stay in the market for a long time, which means smaller risks. Another important point. Very often the symmetrical triangle and the ascending and descending wedge patterns work off exactly like that. They reach the first profit-taking level rapidly, retreat to the broken level, and only then move towards the first, the second, the third, and more distant goals. Notes: the wedge is a reversal pattern. The goals within the pattern are defined by the points forming the broken level. In most patterns, there is likely to be a retreat to the broken levels after reaching the first goal. The movement towards the other ones is resumed only after that. Lesson 2. Classic patterns of technical analysis. The horizontal support line and the descending resistance line form the descending triangle pattern. Here we have several low points to draw the support. We make the resistance the same way of the top points. A descending triangle appears in our chart. Speaking of where this pattern is usually broken, it is the support line, the horizontal level. We can see how the prices here go lower and lower down under the growing pressure, thus increasing the probability of a break. A signal to open comes only in the moment when we can state the presence of a break. In this situation, we see the prices closed below the level. If the closing price is there, then the break is true. A deal is open for the continuous movement. In this case, it has to be a sale. How are goals defined? There is one method when we take the middle part of the pattern and measure its height. We take the same amount as our goal at the price of 1.0844. It's about 280 points. Don't forget to leave the market a tip. The second method, that is also used very often, measures all the waves on the pattern. The smallest wave is 215 to 220 points. We lay the same amount in the chart, off the point of the break. The second goal is defined by the first wave, which is the largest. It's about 385 to 390 points. We lay this max level off to take the profit. It's at the price of 1.0792. I strongly recommend that you use both methods of defining goals. You will get 3 zones to take the profit. The first one is minimal. The second is a middle one. It won't be achieved as often as the first one. It's less guaranteed and should be longer waited for. On the third level, it's absolutely necessary to close the deal. Everyone can make their choice. Those who want more wait for the third level. Those who find less profit sufficient
close the deal at the closest level. Please note how the market confirms the correctness of our calculations. The price drops to the first level and goes back up for a while. Why? The participants started to close deals. We see the same scenario in the second case. The market goes a little back upwards when it gets to the second level. It is corrected because a lot of the participants got what they wanted and closed their positions. It's also clearly seen on the third level of taking the profits. The goal was reached and the market reacts by a correction because of the general deal closing. Notes: the descending triangle and the ascending triangle are continuation patterns. Lesson 2. Classic patterns of technical analysis. The following is an unusual and non-classic case of the descending triangle pattern behavior in the pound-dollar currency pair situation. What do we mean by that? The resistance line was broken, the diagonal trend. In most cases, the support line, the horizontal level, gets broken in the descending triangle. If the downtrend gets broken, we should not open a deal at all. Remember, when we work with the descending triangle, we get a signal for opening only in case of the horizontal level's real break. If there is no break, the pattern is not working itself off, and there is no need to open in any direction. If there is no real break of the support level, we don't do anything. Breaking of the resistance level is very unusual. In most cases, the descending triangle gets broken down. In this case, we see that the movement went up, so if we open the buy deal, we would get a profit. However, this is not a typical situation, and the movement was not determined by the market players working or opening deals based on the pattern, but by other factors. It means that working within a pattern, you should open a deal only in the direction provided by the sales tactics. The descending triangle should be broken down. If there is no real break of the support level, we don't do anything. Please note that although it was not a typical pattern behavior, we would not lose anything since we know about a real break and a false one. We do not open a sell deal if it's a simple testing of the support level. There is a rather delicate but a very important moment. We should always wait for a real break. Never open a deal if a candlestick has not been formed yet and there are no closing prices below the line. Those who knew it did not enter the market, but there must have been those who had already decided to sell since the effective prices were going below the line and it was looking like a break, and it turned out to be a false one. Notes: in any pattern, open a deal only in the direction provided by the sales tactics.